Hello guys, this is CA Pratik Neve. Let us revise section 10. Section 10 is very critical section. Composition levy. Of course, section 10 of CGST Act. When I talk about composition levy, that means it is alternative levy. Alternative levy means a registered person whose turnover is not exceeding some limits may means optionally opt for section 10 instead of paying tax under section 9. So when is a registered person eligible to opt for composition scheme? So he is eligible to opt for composition scheme if his aggregate turnover as per section 2 subsection 6 in the preceding financial year is not exceeding rupees 150 lakhs, but this limit will be 75 lakhs in case of following 8 states: Arunachal Pradesh, Uttarakhand, Manipur, Mizoram, Meghalaya, Nagaland, Sikkim, Tripura. Okay, whenever a manufacturer is eligible for composition scheme and he opts for the same, then the rate of GST for him will be 1% of turnover in the state. But the same percentage for trader will be again 1% but of taxable turnover. And for restaurant service providers, it is going to be 5% of turnover. Please note that whatever GST percentages we discussed right now, they are of CGST plus SGST. This scheme is of 10-1 and this scheme can be opted, as you have seen, by manufacturers, traders and restaurant service providers. But they have a limitation of the service which they can provide. All these three categories of suppliers have limitation of limitation in quantum of service which they can provide. So quantum of service which they can provide is 10% of aggregate turnover of preceding financial year or rupees 5 lakhs, whichever is higher. In short, if they provide services more than this in the current financial year, then their composition scheme shall lapse. Okay. Then apart from 10-1, there is composition scheme of 10-2A. This 10-2A composition scheme is for whom? 10-2A composition scheme is for those registered person whose aggregate turnover in preceding financial year is not exceeding rupees 50 lakhs and they are not eligible for composition scheme of 10-1. The rate of GST in this scheme is 6%, CGST plus SGST. So in short, 3% each of the turnover in the state. Okay. Now, what further I need to understand is, whenever I am calculating aggregate turnover as per section 2 clause 6, what is the meaning of this aggregate turnover? So this aggregate turnover will include all intrastate taxable supplies, interstate taxable supplies, exports, exempt supply as well of all persons having same PAN to be computed on all India basis. But what it excludes GST and it excludes also such inward supply on which tax is payable on reverse charge basis. What I need to understand, especially while calculating this threshold limit for section 10, is that now point which I am telling you is only applicable for calculating aggregate turnover for section 10. You should exclude interest. Interest on FD, interest on deposit, interest on advances should be excluded while calculating this aggregate turnover. Okay. Further, where to exclude this interest? We have to exclude this interest at other two places also. When you are calculating quantum of services given to decide whether you are in a composition scheme of 10-1, at that time also you should exclude. What is one more time you should exclude? You should also exclude for calculating the turnover on which tax is payable. In short, interest on FD or advances or deposit has to be excluded at all possible places, three places. Okay. more in depth, if I want to go of calculating aggregate turnover, I should understand the turnover from 1st April till the date I become liable for registration should be excluded. Where it should be excluded? While calculating the turnover on which GST is payable under section 10. Do you remember? First 40 lakhs we excluded in case of Aapki Dukaan. First 20 lakhs we excluded in case of Chanchal's Beauty Parlor. So that's what I am talking about. Clear? So those who don't know, Aapki Dukaan and Chanchal are the questions which we have done in the main batch. What else I should understand in section 10? If I opt for section 10, then I cannot claim input tax credit and I cannot collect output tax. So since I cannot collect output tax, I cannot issue tax invoice, but I have to issue document called as bill of supply. So of course, the person who purchases from person who has opted for composition scheme also cannot claim ITC. Person who has opted for section 10 will file return on annual basis in GSTR 4, but he will pay the tax on quarterly basis. In he will pay the tax and file a statement called as GST CMP 08. Okay, this payment of tax is to be done by 18th of the month following the quarter, and the return which I am talking about GSTR 4 should be filed by April 30 after the end of financial year. Okay, so this is all about the very important section of composition scheme. Thank you so much, guys, for patient listening. Your mentor, CA Pratik Neve, signing off. Bye bye.